What if we told you that the secret to long-term investing success is not some crazy, exotic strategy? It's not timing the market perfectly. It's not chasing the hottest stock or investment that you hear people talking about online. And yet, this could be one of the most effective things that you do for your future self.
The core of long-term investment success comes down to just one thing, and that is participating in the long-term growth of the economy by owning equity in a cost-effective way and staying invested long enough for the compounding to work its magic.
I think it's hilarious when folks will be like, oh yeah, I have a diversified portfolio. I've got Apple, Microsoft, Google, and Tesla. Hello, welcome back.
Hello, good to see you as always.
Great to see you too, partner, as always, and great to be with all of you. Welcome back to another episode of Living Richly with Curo. My name is Ann McCabe, and I am the CEO and a partner here at Curo Private Wealth. And I'm joined, as always, by my lovely partner, Atricia.
Hello, I am Atricia Roberts, COO and a partner here with Ann at Curo. Thanks for coming back if you've been here before, or thanks for checking us out for the first time if you're new.
Yes, we love all of you. We appreciate all of you. And if you are new here, our mission, our goal on the podcast, but also in our daily lives as advisors at Curo, is to educate, inspire, and empower you on your financial journeys. And today, what if we told you that the secret to long-term investing success is not some crazy, exotic strategy? It's not timing the market perfectly. It's not chasing the hottest stock or investment that you hear people talking about online. And yet, this could be one of the most effective things that you do for your future self. So, this episode was inspired by an article we came across from Morningstar. And if you're not familiar with Morningstar, it's a large research firm, and you may be familiar with the STAR system. So when you're picking your funds for like your 401k, you probably see this is a 4-star fund or 5-star fund. That is a Morningstar thing. So Morningstar is very well respected in the industry. And when we saw this article, we were like, holy cow, this is exactly what we talk about each and every day at Curo, the philosophy that we use with our clients, how we coach clients, especially through the hard times. And let's be real, right now, the noise is just a lot, right? There's so much, it is deafening. There is so much uncertainty. There is so much, pulling us in, trying to pull us in one direction or the other. And this potentially feeling that we need to like pivot every time the market sneezes or some piece of news article comes out. So we just want to reinforce here that the key to success is actually much more grounded than any of those things. So we're going to get into it. And honestly, this episode could be like all of 5 minutes, but we're going to elaborate a little bit for you all. File this in the simple but not easy category.
Exactly. One of those things that just logically makes so much sense and sometimes it's so hard to do.
Right. Exactly. All right, Atricia, let's dive in.
Let's
We're
get
going to
in.
give the bottom line in what are we, like 3 minutes into the recording?
Right. Was it don't bury the lead? Yeah, we're going to give it to you right up front. So what's the secret? The core of long-term investment success comes down to just one thing, and that is participating in the long-term growth of the economy by owning equity in a cost-effective way and staying invested long enough for the compounding to work its magic. Very easy.
All right. See y'all. Have a great day.
Thanks for joining us here at Living Rich.
Mic drop.
It's been fantastic having you here today. But really, that's it. So now we're going to break it down. Obviously, you came to check us out for a reason. We're going to give you more information. So let's talk about the participation in the long-term economic growth. So there's a lot going on today, as Ann already mentioned. Uncertainty, there are no lack of experts always claiming to know what tomorrow is going to be, what we should look out for. But there is one thing that has been fairly certain, and that's the long-term history of the US economy includes lots of challenges and uncertainty. We've seen recessions, depression, world wars, years of extreme inflation, fear of nuclear annihilation, extended periods of unemployment. But in all of those cases, it has always bounced back. So when we talk about the long-term economic growth, we're talking about weathering through all of those events over several hundred years at this point. And when you own a diversified basket of stocks or of companies, you essentially own slices of these actual real businesses. And over time, those businesses, they earn profits, they grow, they distribute dividends, and they build value. And you, for long-term success, want to be in it and own it and stay invested for the long term.
All right. So that's number one, participation. Number two is we want to make sure that we keep our investments cost effective. We can find ourselves in a situation where we're paying too much in fees for investments and we're not really getting additional value for that fee. So we always say fees are an issue in the absence of value. If there is a reason to pay a higher fee, we're getting extra return or extra downside protection, then fine. But a lot of times what we find is that people, investors are paying fees and not really getting that additional benefit. The other thing is not just the fees of the funds or the investments that you're in, but also think about things like trading fees. So each time you buy or sell an investment, think about the tax fee. I know it's not really a fee, but it is a cost to investing. So when I hear about people talking about day trading and how they made X amount of percent in, a day or a couple of days, you must back out the cost that is going to take to buy and to sell that investment. And then also the taxes. So what is your actual gain after you take all of those fees out? It's also important to know when is it time to bring in a professional manager to help you manage your investments. So we think that, the DIY thing is fine, for a while, but you will get to a point in your financial position where you need to bring in people who are experts and know what they're doing, like Curo, like our team. So the third point is we have to stay invested. So Atricia talked about this just in terms of the long-term participation of economic growth, but we always talk about time in the market, not timing the market. So what is important here is as long-term investors, we're in it through the ups and downs, through the waves, and we stay invested. And what a lot of people don't know is missing some of the best days of returns in the markets can dramatically decrease the returns that you experience. So over the last 20 years, 2 decades, if you missed just the best 10 days of investment returns, so think about that 10 days in 20 years, your returns were cut by more than half. And that is real, depending upon your portfolio size, hundreds of thousands, potentially millions of dollars of difference that we're talking about. So this is real. The other thing to remember about the whole best day, worst day thing is the best days are clustered historically anyway around the worst days. So if you're like, oh, well, that's cool, I'll just get in for the best days and not be in for the, yeah, okay. If it were that easy, right? Like Atricia and I would be doing this podcast from a private island and we would like fly our private jet there, right? Like just
Right.
not that easy. And then the last one, and we always talk about how this is potentially the hardest one.
Mm-hmm.
We always call this staying grounded and staying centered when things are going crazy around us. But another way of saying this is avoiding behavioral mistakes. So what will happen, and we, pretty much can guarantee that one or two or many of you, the next time there is a piece of very scary news that makes the markets decline for longer than a month, right? Because we had a big decline in April, but it lasted
Mm-hmm.
a very short period of time. It's going to be scary. You are going to feel the urge to do something. And a lot of times people decide to what we call go to cash, which just means sell your investments, park your money in cash until things get better. Okay.
Okay.
So let's not do that.
Right. Glad you have the crystal ball to determine exactly when that happened.
Right.
Yeah.
Exactly.
But to the point around the best days happening around the worst days, we even look back to that time in April, right? When the market sold off really dramatically in a very short period of time, the recovery also happened very quickly in a very short period of time. So just goes to show you just got to hang on. It also makes a good case for emergency cash, right?
Wait, why
Having,
haven't we ever talked about that before?
I don't know why we haven't ever brought it up on this podcast.
Huh. Interesting. Noted.
Noted. Okay. So
Only
now,
about every episode.
because we have to remind people, you have to
I
remind
know.
people when the Living Really merch drops, that's going to be the first t-shirt. Like,
Oh my
do you
gosh.
have enough emergency cash reserve?
For sure. I love it. We're gonna make it really classy, y'all. You're gonna
You're
you're
gonna,
gonna want that merch.
you'll want it. Okay, so now why this matters and what happens when we don't pay attention or mind these principles. And now this goes for all investors, but I think especially for women investors. And if you've listened to us before, you know we speak a lot to women investors as women advisors. But number one, we may underinvest because of fear. So to Anne's point, I'll wait until the things get better or before they calm down before I invest. By trying to time the market, it's impossible to actually figure out when it is getting better, right? And so when you miss out on those best days, you also miss out on an incredible amount of growth. Number two, we may chase what's hot. Now, we see a lot of this happening right now. Again, AI has been all over the headlines in every industry, in every field. I've had questions from some clients like, what should we be owning to take advantage of AI? But it could be AI, it could have been whatever the new hottest thing was 5 years ago. But again, this may incur greater costs and even greater risk by chasing what's hot right now, and it reduces your long-term earning potential. And then number three, and just highlighted this, but we may go to cash when markets are declining and then re-entering when it's too late or never re-entering at all. I've often said to clients that stocks are the only thing that we don't want to buy on sale, right? So people are always afraid when things are down and we want to go to cash and we miss out on good opportunities because of it. And missing those really good days, which typically happen around the worst days, is the best way to completely be detrimental to your long-term portfolio growth.
Yeah. I think just to double click on the first point of like waiting until things get better. I remember Kara Murphy. Shout out to Kara. We love
Hi,
Kara.
Kara. She's a
Hi,
friend of the
Kara.
pod.
Yes. Friend of ours, personally, professionally,
Mhm.
and of the pod. But Kara, so for those of you who don't know Kara, what rock are you living under? But she is our back office is Kestra, and she is the chief investment officer of Kestra Investment Management. And she's amazing. But she talks about when we're talking about market volatility, she gives the analogy of when you hit turbulence when you're on a plane, the pilot waits until he or she is certain that they're through the turbulence to get back on, to take off the seatbelt sign and to say, all right, you can go about your business again. It's not like the second they get through the turbulence, they're like, okay, cool, smooth sailing. And it's the same thing in the markets. It sounds easy to just say, oh, okay, I'll wait to get back in when things feel better. But usually what that means is you've sold as investments have declined. You get back in when things are high. And that is the complete reverse of what we know logically we're supposed to do as investors. So just keep that in mind. By the time the all clear signal or the seatbelt sign is off, it's typically, maybe not totally too late, but you've missed out on a
Right.
lot of returns.
Yeah, on a lot of the climb, right? You got to, even if the plane bounces a little, you got to take the ride back up on the
Right.
climb.
Exactly. So I love that analogy. I remember her sharing that back during some bout of volatility. And I was like, ooh, I'm going to start using that. All right. Well, seriously, we could have done this in 3 minutes, but hopefully providing a little bit more color to really the beautiful simplicity of what it means to be a successful long-term investor. This is the beauty is it's really not complicated. And a lot of times, Wall Street makes it try to seem complicated using big jargon and making you feel like, you need to know way more than you actually do to be a good long-term investor. But we loved this message that in this article that Morningstar put out because it's exactly how we coach clients to think about investing. And also importantly, it's how we coach them during the uncertain times, right? We are big believers in communicating and holding people's hands and helping them not jump off the cliff when they're at the edge because they just can't take the pain anymore, right? So we love to bring in historical information and talk about what's happened in the past, not that it always repeats, right? History doesn't necessarily repeat, but it rhymes. And so this is something that we love to do is not just coach during the great times, which right now we're in a, pretty solid bull market, but also very importantly when things go down. And the bottom line here is that one of the most important things we can do as investors is stay the course because trying to dodge the bad days or the bad times, trust us, it's just not going to work.
Yeah, and it's not gonna be super sexy all the time, right? Like, I know the new hottest cryptocurrency feels really sexy, or the new AI company sounds really exciting, but over the long term, it's really just the boring stuff, right? It's owning stocks and staying invested that actually helps to grow your wealth.
Yep. Yep. You got to be comfortable with the boring.
Yeah.
So before we wrap, we love to give you all kind of takeaways and tangible things that you can take back and implement in your lives. So we do have 2 ideas for you that you can go ahead and do this week while it's fresh on your mind. One is just check your portfolio. If it hasn't been a while, or even if it has, make sure that you are invested in a broadly diversified basket of stocks and bonds, if that is appropriate for you, depending upon your time horizon. And let's just talk a little bit for a moment about diversification. I think it's hilarious when folks will be like, oh, yeah, I have a diversified portfolio. I've got Apple, Microsoft, Google, and Tesla. And you're like, I'm sorry, what?
Yeah.
No,
No,
that's not what we're talking about
that's
here.
not what we mean.
Not what we mean. So just because you've got 5 different stocks in your portfolio does not mean you're diversified. When Atricia and I and our team at Curo talk about diversification, we're talking about, yes, large cap growth, which those are companies that I just mentioned in the US stock market. But we're also talking about small company stock, mid-sized company stock, large value stock. Don't forget about the value side. Growth has been getting all the attention because of the tech boom, but also don't forget about things like international and even inside of bonds. There's a ton of diversification when we're talking about bonds. I think bonds, people think like, oh, bonds come in one shape and size, but there's so many different kinds of bonds that you can have inside of your portfolio. So that is the level of diversification that we're talking about. Okay. Not just 5 stocks in your
Yeah.
portfolio. Just wanted to mention that.
Clarify. Yeah, and also
Clarify.
make a note about why maybe working with a professional as your assets grow may actually add value over the long term because again, we talk about what true diversification means and how to weather different markets and different storms of or bouts of volatility.
Yeah, exactly. And then the next one, and I think this is especially helpful when we are in a downturn or when we do hit another bout of volatility or uncertainty. Do this now while things feel good, because then you can always reference back to it. But write down your investment time horizon. So as you are accumulating wealth and investing, are you doing so for the next year? Chances are most of the folks listening are not doing that. Are you investing for 5 years, 10 years? Are you investing for 30 years out? Getting really clear about what this money is for will help you tap into that long-term focus that we always talk about, especially when things are kind of crazy. Because if things are crazy over a month or even a year, but your time horizon is 20 years, let's say, then it's going to be okay. You have time, right? You have time to make it back up. So do that now while it's fresh on your mind and while things are kind of calm. And then also your why. Like, why are you investing? Why are you saving? Why is that important to you? And this again can be a great tool to help you tap back into this when things are going crazy. So please save this episode for that moment when we hit market volatility again. We promise you we will. We can't tell you when, but it'll happen. But tapping into and remembering what your time frame is and your why for this wealth, this, money that you're investing, I think can be super helpful to weather those storms.
Yeah, and remembering that time may also even help you from checking in too often. We all know that person who checks every account
Oh my
every
gosh.
day, multiple
Yes.
times a day. And I shared with a client in a conversation who is one of those I check every day. And so I said, okay, I understand why you check maybe your checking account every day because you're swiping a debit card pretty frequently, spending a lot out of those bank accounts. But why are you checking a retirement account every day? You're 55 years old and you told me you want to work at least until you're 70. You don't need it tomorrow. There's no reason to log in and look at it today. So sometimes just even taking away behaviorally the anxiety of looking too often or checking too often when the time horizon is years, maybe even decades down the road, will also help you to stay the course, I think.
I think so too. Absolutely. Fantastic. Also back to your point is, if you know a professional is watching it, like me
Right.
and Atricia and our entire team are looking at our portfolios literally every single day and then doing deep dives periodically to make sure that we understand all the underlying
Mhm.
positions and whatnot. So that's another thing that's nice about working with a professional is you don't have to be the one checking it every day because someone else is.
Exactly. You're paying us to do it. So
Right.
log off.
Yes. Exactly. Exactly. All right. Well, it is time for our closing thought of the
Mhm.
day. So, Atrisa, what beautiful closing thought do you have for
I
us?
don't know, that is beautiful. But so my sorority, the local chapter of my sorority is going to start reading 107 Days, the book by former Vice President Kamala Harris. And so I ordered the book, but as I was doing some reviews, you start ordering books and then you start reading critics' reviews and readers' reviews. And there were several reviews that highlighted a quote that former vice president made in the book. Now, I haven't started reading it yet, so I don't know all of the context, but the quote struck me because it resonates with me so clearly. And so the quote is, and I want to read it to make sure I get it right. I didn't have time to build a new plane. I had to fly the aircraft available. And when I read that, I was like, whoa, I think about all of the situations in the moments where you just kind of had to jump in and take over. It wasn't your design, it wasn't your plan, or even it wasn't even a mess you created, but you had to jump in and be the one responsible for cleaning it up or making it better. And so having that idea and realizing that a lot of people are experiencing that, right? Like I don't have the time to build this the way I would have liked to, but I still was responsible for flying what I had available and trying to make the best of it. So I love that quote. I can't wait to read the full context. I mean, I can make assumptions about what she's talking about, obviously. Um, but it resonated with me a lot in this idea that sometimes you don't get to build it. You just have to fly or you have to go with what's available. And that's okay too. It's a good
Yep.
reminder for me and
I
hopefully
love
for you
that.
guys.
I mean, hello, how applicable is that to your life, right?
Yeah.
Professionally.
Yeah, professionally, even personally, right? Even things that I've had to jump in and manage that I didn't necessarily plan or craft. And, I didn't get the time to build it. I just had to go with what I had available. And I mean, and it's also a good reminder that at least up until this point, I've survived most of those situations okay. Right? At least at the time of this recording, right? Surviving and in many cases thriving. So it's a good reminder that you won't always get to design it exactly how you would like to, but you can just jump in and go with what you got and make it work.
Yeah, exactly. Oh,
So
I love that. Can't
yeah,
wait to hear more.
yeah, I
You'll have
can't
to give
wait
us
to
a book
share
report.
my review.
Yes,
I'll share my book
exactly.
report with the listeners.
Yeah, exactly. Awesome. All right, my closing thought, it's funny when we were talking about how sometimes things aren't sexy, right? And
Mhm.
sometimes it's kind of pretty straightforward things and sometimes mundane, right? Things that we have to do over and over again. And I think that applies also to health and, getting fit. I think people sometimes overcomplicate it, right? They're like, "Oh, should I do, keto? Should I do intermittent fasting? Should I whatever?" Like there's a million things out there. Should I do GLP-1s? Like but I think at the end of the day, we overcomplicate it. And sometimes it's the most mundane things like, making sure we're getting our workouts in, making sure we're moving our bodies, making sure we're drinking enough water, like really, really straightforward things that aren't sexy um, are the keys to long term health and success. So I came across a quote from like a fitness person who I follow. And it's so funny because exactly what you said, I was like, oh my gosh, that's basically my closing thought. Not surprising, y'all. We're like
Oh, yeah.
always
We're
yeah,
aligned.
right there, aligned. Okay, so this guy, he had a whole post about how he just, he has made some decisions about how he wants to show up in life. But he basically said, I just decided I'd rather be bored by excellence than entertained by mediocrity.
Mm,
And I was like, boom. He just said, like,
boom.
that's the difference between being ordinary and being exceptional is you are just bored by excellence. Like you just
Yeah,
do the things you need to do each and every day. And you're not chasing the next hot thing, right? Which is that getting distracted, but
yeah,
ultimately leads to mediocrity.
yeah.
So
That's
how
so
apropos.
true. Yeah, it's fantastic. It fits with what we've talked about today, the whole thing. But yeah, it's the little mundane moments in life that usually lead us to success, right? It's not the big, exciting, chaotic, frenetic things that take place. It's just the little small steps, you know? Solid core sounds really sexy. Sometimes just going for a walk is enough.
Yeah, exactly. Yeah, and like we've talked about before, it doesn't have to be a mile. Like you
Right.
got 10 minutes during the day, cool, go do that, right? Like it doesn't have to be super complicated. So,
Yeah, love
so
that.
much in life is like that.
Yeah.
Yeah.
And again, it's
Awesome. Well,
gonna
I
be
loved it
boring
too.
most of the time, unfortunately.
Yeah, but think about the great results we can get. It's not so
Yeah.
boring when your portfolio is like exploding
Right.
with growth and you're like,
Yeah.
"Oh shoot, my money is working for me now." Like that's pretty cool. That's not boring.
No. No, that's exciting.
That's exciting. But you have to like do the boring things to get to that
Right.
excitement. That's the key.
Right.
All right, y'all. We hope this has been helpful. Let us know. Reach out to us. Let us know
Yeah.
what questions you have, what you thought. We do have an email podcast at curoprivatewealth.com.
Mhm.
Tag us on Instagram. We're trying to build up our Instagram presence on there. So please feel free to reach out there. Thank you so much for spending time with us. We appreciate your time. We know there are a million things you could be doing right now. And we're just so grateful that you are giving us some of your time and attention.
Yeah.
So until next week.
Live richly.
Thanks again for tuning in. If you enjoyed today's episode, please be sure to subscribe and share it with someone who might benefit from it. Friendly reminder that this is for informational purposes only. For additional information, please visit us at www.curoprivatewealth.com. Until next time, live richly.